Good morning, Bookmap community. It is March 25th. It's Monday. My name is Charles. Thank you so much for tuning in. If you don't know who I am, I run a community called Piratetraders. We are focused on the ES, the NQ, and how it moves through the two-way auction process. This morning, I'm going to be talking about the ES, what happened last week, what to expect this week. So buckle up. Are you guys ready? Please smash that like button. Give me them thumbs up first thing in the morning and say good morning in the chat. All right, so last week was a doozy of a week. The market had been balancing around in what we call a balance area. That is essentially just a range where the market was bouncing up from one end to the other. Okay? Because of the FOMC meeting on Wednesday, the market was able to break out of that balance area, creating momentum to the upside. Now, when we broke out of balance, because we did it so quickly, we left behind some very thin volume nodes and some single prints. Also, anytime you break out of balance, you are likely to back test that breakout. So the combination of those things, the combination of the fact that we broke out of balance, we got excess, and we have not back tested that balance, and we have not backfilled those single prints, increases the odds in my mind that that is where the market is heading this week. Back down towards 52.50, looking to turn this area around that balance area high into support for continuation higher. Now, there is two ways that the market can balance off the excess that it created. It can pull back with price, as we just discussed, or it can go sideways and use time. It can just stay at higher prices. If we'd have opened inside yesterday's range this morning, I would have been considering the idea that we were probably going to use time. Now, that doesn't mean we can't. It doesn't mean the market can't reverse this morning, fill the gap, get back into yesterday's range, and then spend enough time and bring in enough volume to continue back up towards the all-time high. It absolutely can. However, I think the higher probability is that it's going to continue lower and, back test that breakout. Okay. So first thing this morning, let's zoom out and we'll look at the market from sort of a bigger perspective to give us some context to carry forward. We'll start by looking at the monthly chart. Now, obviously, we're not going to get a lot of day trading ideas from the monthly chart, but it just gives us some kind of context to add to the shorter time frames. A lot of times, if you're feeling super bearish, looking at a daily chart, if you zoom out and look at a monthly chart, all of a sudden it changes your mind. So having a little bit of perspective to start the week is never a bad idea. So if we look at the monthly chart, what do we see? Continuation of the momentum to the upside. We have had 5 months of momentum. The market's been making higher highs and higher lows month after month after month. Every candle is green. Okay? That is very bullish to see. At some point, that momentum will roll over. At some point, this momentum will run out on the monthly time frame, but it hasn't happened yet. So that means we could get another month and another month and another month for all we know. Okay? So it's bullish looking at the monthly time frame. Let's zoom in and look at the weekly. So just like with the monthly time frame, if the market's going to pull back on the daily, it will first do so on the weekly. And we have had a lot of momentum on the weekly time frame. So the market had a couple of red candles in here, but what has it been doing regardless of that? Continuing with this channel up and to the right. It has just had more momentum and more momentum and more. So once again, that could continue for weeks ahead for all we know. Now, if this week the market pulls back down, it backfills that test of the balance area high, it continues back down to the balance area low, and then it makes a new weekly low on the weekly time frame, well, then we can start talking about a larger pullback. Then we can start talking about a change on the monthly time frame. But for now, the weekly is saying still bullish. Let's zoom in and take a look at the daily time frame. Okay, so now things are a little bit more detailed. So we can see, yes, over the last few weeks, the market has just been working its way higher and higher and higher, but it's been doing it in a very sluggish way. It's been just kind of pushing and balancing and pushing and balancing and pushing and balancing and pushing and balancing over and over and over again. So would we really be so surprised if this week was another balancing week? Would we really be so surprised if the market came down to test the breakout of balance? No, of course not. We've been doing it for the last few months. This is the way the market's been moving higher. Okay, well, should we be bearish? Should we assume the world is coming to an end if it starts to go down? Of course not, because every time it starts to go down, it turns around and goes right back up. Goes down, turns around and goes right back up. Goes down, turns around and goes right back up. Goes down, turns around and goes right back up. So on a longer time frame, we don't want to be getting bearish right up here. Sure, we might need a little bit of a pullback, but that might be all we need to turn around and go right back up again. Okay, great. So now let's zoom in and we'll look at the market profile chart, which will give us an even more detailed look at levels that we should be considering, levels we should be interested in. So first and foremost, we have the single prints that we left behind on the day of that FOMC meeting. Single prints often get backfilled. It is very common. The base of those single prints, the place where the market started to have those single prints, often becomes support or resistance. So essentially, traders who want to get long, but they don't want to FOMO, right? They don't want to chase price. When they see those single prints, they'll start putting in their buy orders down there, and they'll wait for the market to come back, and then they'll get long. So the first potential support that stands out at me this morning is going to be 52.67, the base of that set of single prints. So maybe the market opens, tries to fill the gap. Maybe it fills the gap. Maybe it doesn't. If it gets momentum and it comes down, this would be the first place it could reverse and start to head back up. If it were to do that, that would change my mind about the need to back test the breakout of balance. That would tell me that we're going to balance with time, not with price. Okay? So the first level I'm watching is 52.67. If that cannot hold, my assumption is the market needs that larger pullback with price. And so then I would be looking to test this node, which was basically where the morning of the FOMC was trading. So that's going to be anywhere between 52.47 and 52.32. Okay? So this area in here, that is the next potential support for the market. If the market doesn't find support at the base of the singles, it will likely continue down into here. Where exactly it will reverse in here, I don't know. But if it does, if the market comes back down in here and finds support and reverses, that will be very bullish carrying forward. Why? Because of what we just talked about looking at the daily chart. That every time they get a pullback, they get a bounce. It's a bull market, you know. So pullback to back test, that balance that gets a bounce would be very, very bullish to see. Okay. As far as what's going to happen today, I don't assume we would get much momentum past that. If we do get a gap and go this morning and the market continues down towards those lows, I assume that's where the market would run out of steam. If not, if we get back in this previous balance area, and we start to spend time and bring in volume, well, that's very bearish for a larger pullback to the bottom of that balance area. Okay? But I don't predict that's what's going to happen today. But if we get back down in there today and then come tomorrow we get new selling, we would be bearish for continuation lower. Any bounce other than that, a bounce anywhere in here, would be bullish to carry forward. Okay? So now let's zoom in and we'll look at the overnight profile and we'll see what we're working with here today. So the overnight inventory over the weekend is net short. That means a majority of the participants were going short. That's how they pushed the market from Friday's low to where it currently is. Now, obviously, we've still got, 20 minutes until the market opens, so anything can happen. So we can't use exact levels just yet. But the first priority for the market will be to try to fill the gap. So essentially, imagine all those overnight sellers. They've been getting shorter and shorter and shorter, trying to push the market down. Imagine they watch the market open here in America, and then it turns around and starts coming back up. They are instantly going to cover their shorts. So that's what leads to a gap filling. Okay? Also, if they are able to open and immediately push below the overnight low, that's very bearish, because then none of them have a reason to take profits. They might as well stay in their short and see how far they can push it. So what happens in the first few minutes today, whether we fill the gap or we fail to fill the gap, will give us a pretty good context to carry forward. If the market fills the gap, we measure a gap to the previous day's low, so that would be 52.89, and it finds resistance there. So they can't spend time in yesterday's range. They immediately get smacked down. That would be very bearish for continuation lower. Or if we fail to fill the gap and start to head lower, that would be bearish for continuation lower. The only thing that would get me bullish this morning, short term on the, intraday time frame, the only thing that would get me bullish is if we pushed back up into yesterday's range, into Friday's range, and then we started to spend some time, bring in some volume, and get above the overnight high. Okay? Anything below that overnight high is likely to get smacked down and continuation lower, because as we discussed, the higher probability is that we're heading to backtest the breakout. Okay? Any questions on any of that? For the ES. Good morning to Laura. Cool Bean says, "R." Mark from the UK is here. Good morning, Will. Ships in the house. Nap, Debbie B, Sheriff, Nicholas, Michael, Tom, the demo trader. Cool Bean says, "Smash the like or face the gulag." I don't think a gulag, that's not pirate terms. Let's not use that one. Walk the plank. Sheena, good morning to you. Andrew is here. Sebastian in the house. Carmen, NQ, let's do it. I have a feeling the NQ is doing the exact same thing as the ES, but let's take a look. We'll take a look at the NQ to find out price action. Ooh, very interesting. Okay. So the NQ doesn't have quite as clean a balance area as the ES. I would describe its balance area high as being somewhere around 18,350. So again, same idea. We had the excess. We need to balance off that excess. They are either going to balance it with price, coming back to 18,350, or we literally turn around this morning, head right back up, and then we know we're balancing with time. Both markets have a gap down. Both markets are likely to try to fill the gap. However, I would say the NQ has a higher chance of being able to stay in yesterday's range, because so much of the overnight inventory was inside Friday's range. There's a very decent chance that they could get back up in Friday's range, start to spend some time, start to bring in some volume. If they do that, they could convince new buyers to go long. So I am a little less bearish on the NQ for a gap and go than I am on the ES. I would say if the market gets resistance on a gap fill, So 18,500 gets resistance there. Or it gets resistance at the halfback from the overnight, which was this large node right here. We'll call that 18,535. If it gets resistance at either of those levels, that would be bearish for further downside continuation. But if it gets up above 18,545, it is likely to bring in new buyers. So it'll probably go sideways for a little bit. If it gets above the overnight high, if it gets above 18,605, that would be very bullish for continuation to the upside. So I think you're going to have to be a little more like water with the NQ today. A little more nimble on your feet because anything could happen. We got 12 minutes till the market opens. Any questions for the pirate? Hit me up in the chat. Please smash that thumbs up. We got 97 people hanging out, but only 39 likes. Half of you are holding out on me. We don't like you, Charles. No button for you. Sheena says, is the backtest area the same as the fair value gap? Not exactly. So if you're talking about value areas, the value area is actually just below the base of the spike up at 52.67. So like I said, to me, if the market wants to balance using time, that's where they would do it right there and then go sideways. Okay. But if that fails, it has nothing to do with this value area. It has to do with the breakout of balance. Which is just the daily ranges in here. It's very, very common when you break out of balance, you come back down and just kiss the high again and then head right back up. It was also the FOMC day, which means it was a very emotional market. And we also left behind a lot of weak references, as you can see, between 52.33 and 52.41. So all of those things are magnets. The emotional move because of the FOMC, the breakout of balance, and the weakness. It just all compounds to significantly increase the odds. That's where the market needs to go for one final visit. And like I said, the thing that would prove me wrong is if we start to spend time, bring in volume inside yesterday's range, and then get above that overnight high. Otherwise, I have a feeling she's going down. I got a feeling. I'm sorry. I'm so sorry. Cool Bean says, what is your favorite rum-based beverage? Well, it's not very fancy, but a rum and Coke is the best rum-based beverage. But I stopped drinking them when I was like 25 because I started getting crazy hangovers. It's just too much sugar. Jay says, thank God it's Monday and the casino is open. 9 minutes, Jay. 9 minutes. Thank you, Ravi. Any questions from the chat? Anything I said didn't make sense? Does anybody want to dispute me and thinking I'm wrong? Thinking they got some information to share? Put it in the chat if you dare. Halori says, with the effect of Vana, we can see today a bearish day. Is this like window of weakness or something like that? Who knows? I'm more focused on price action, but maybe you're right. Debbie B says, Charles, can you tell me again what you see that we are headed down at the open? So what tells us we're going down in the open? Well, first off, the context of the pullback with price. So once we created the excess, we're either going to balance it off with time or balance it off with price. So step one, we have a gap down. That tells us we're balancing it off with price. More likely, not a guarantee, but more likely. So for the market this morning, there's basically one of three scenarios that would take place. Either the market would open and immediately push down below the overnight low, like just like that. Boom, it just goes. Okay? If that happens, we would watch the overnight low for resistance. If that overnight low turns into resistance, if new sellers start to pile on down there, that is bearish for a larger pullback. Okay? That is a gap and go. Why is it so bearish? Because all the sellers from the overnight will hold on to their shorts. They're not going to get out right away if there's new selling. So then you got new FOMO sellers joining on this morning, and you got longs from last week that are starting to have to cover, right? Adding to liquidation. That is just very, very bearish. The most bearish scenario you could get. All right. The second alternative would be the market opens and it starts to fill the gap. It tries to get up to yesterday's low, but it can't. It gets new selling somewhere inside the overnight range. Where exactly? I don't know. We'd have to just wait and see. But somewhere between wherever it opens and the previous day's low. Okay? If we get selling in there, that is also a gap and go. It means only some of the overnight traders took profits and or exited their trades, and new sellers piled on. Again, same scenario, bearish to see as a gap and go. The third scenario would be the market works its way all the way up to the previous day's low. That would be the least bearish, but still bearish. This is what you must understand. Filling a gap isn't bullish, right? If it's a gap down, just getting back to the previous day's low does not mean the market is bullish. It just means those overnight sellers are getting out of their trades, okay? But that's giving regular trading hours sellers an excellent location to get short. It is also giving regular trading hours gap fill buyers a location to take profits. So if we get up to yesterday's low, that is the least bearish scenario, but it is still bearish. If we get resistance there, we look for continuation lower. And the only scenario that changes things is if we get up in yesterday's range and stay in yesterday's range. Take a look. It's in price action. Nicholas says upside hypothesis. So again, just to repeat it one more time, if we get above the overnight high, right? So if we get up in yesterday's range and we start to spend time and bring in volume and we poke above the overnight high, that is bullish. Okay? And then we're looking for support to get new all-time highs. Because one of two things is happening. We are either balancing off the excess with price or with time. If we're balancing with time, the first signal we would get that that's happening is getting above the overnight high. If we get that signal, well, we want to be buyers because by balancing with time, the next target to the upside is the all-time highs. But that is the least likely scenario in my mind as of now. Still possible. Never say never. But least likely. The idea being if they wanted to do that, If they wanted to head back up to all-time highs, we should be opening inside Friday's range today, not with a gap down. It is very, very common for gaps to fill on Mondays. That doesn't mean it has to fill immediately, but it is very, very high probability that it will fill. So we're just going to monitor it one tick at a time. Does it get below the overnight low? If it does, do we get resistance? If not, do we get resistance somewhere in the overnight range? If not, do we get resistance at yesterday's low, Friday's low? Don't you know? 2 minutes till market open. Woo! It's getting exciting. Fu, good morning to you. Bill is here. Cool Bean says, just tell me what to do, Charles, so I do not have to think. I know he's joking, but that is, I hate that. That is not what I'm doing. I'm trying to give you all a context to think for yourself. I won't always be here to guide you. However, this scenario will happen many, many times in the years to come. If you're going to be a trader, you're going to see the market create a balance area. You're going to see the market break out of that balance area and get excess. And then you're going to see the market either balance off that excess with price or with time yourself. So use the lessons I discussed today to understand the context so you can use it every time it happens forever and ever. Always and forever. Breakout and back test. Boy, I'm on one this morning. All right, the market is open. So I'm going to zoom out here with Bookmap now that the market is open and try to get some context with liquidity. Where are the large nodes of liquidity that are jumping out at me that seem like they're really important? So the first thing I'm seeing is earlier this morning, there was a very large pool of liquidity up here around 53.30. They disappeared it and instantly moved it down. So that tells me they didn't want a larger pullback in the overnight market. They wanted to keep a magnet above to stop the price from running away too far. But now they do want that momentum in the regular trading hours. So as long as this giant node remains here at 52.50, it increases the odds in my mind we will get a gap and go. Because there's a big old magnet down there pulling on price. Now, will it stay there? No, of course not. It'll disappear just like that at some point today. But as long as it is down there, that means they don't want the market to get back up in yesterday's range and spend a bunch of time. They want these sellers to remain in control. Let's see what happens. So I'm going to mark some potential resistance levels here inside the overnight range. Again, no idea where it'll flip, but if it does, that will be bearish to see. The first is going to be the halfback of the overnight range. That's right at 52.84. The next is going to be just above at 52.87, where you see this node of time and volume. And then the last will be just inside yesterday's range. The market reversing at any of those levels would be bearish to see. Until then, the higher probability is that they fill the gap. Fighter Pilot, good morning to you. He says, have a good trading week. Be the best trader you can be. Excellent words of advice. You guys are laughing. You're thinking it's overly simplistic. This is the way, right? You're not in competition with me. You're not in competition with the market. You are in competition with yourself from last week. If you can perform better this week than you performed last week, you're heading in the right direction. Good morning, Willie T. John Wick in the house. Boo, boo, boo. John Wick says, what software is it on the left? It's called Market Profile Software. It is from a company called Window Trader. Window spelled without a W at the end. Percy in the house. Good morning to you. How we doing on likes? 62 likes, 145 people hanging out. If you have not yet, please smash that thumbs up button. Sure would appreciate it. Good morning, Kyle. John says, do you use footprint? I do not, because basically volume profile is the same thing as footprint. But you can absolutely use footprint on Bookmap if you want to. And it'll give you the same information, which is just essentially how much volume trades at each level. You can also set it to tell you the delta and everything else. The settings are insane. The different things you can add. But I already got that information on my market profile chart. So I like to keep my Bookmap as clean as possible. The main focus for me on the Bookmap is the heat map. So that is essentially where are the nodes of liquidity. The side over here on the right, that is the current order book. So I'm comparing where was volume in the current order book compared to now. And you can see it on the heat map. And that helps you to understand when there are changes in the market. The markets are heavily driven by bots, and those bots use that liquidity to make decisions. So if you see changes in liquidity, you know there's going to be changes in price. I also like to use the stops and icebergs indicator. It's another way to see the bots when they're botting it up. Speaking of which, they're botting it up right now. Botting it up real good. Real good. Real good. Okay, so this is a very exact high that they're creating here. Technically, it's good taper, but it is a low volume high. And the fact that so much volume is trading exactly at 52.81 tells me even if this holds as resistance right now, they will likely come back up for it. So I would be cautious shorting this. If I were to get short, I would immediately move my stop below my entry if it got to move lower, because I don't think this is the resistance yet. I think this is bot shenanigans. They're trying to get people long and get people short so they can push it down and then whoosh, take them back out. Bot shenanigans. John Wick says market profile does show volume. Yeah. So the nodes that you see right here. So this is the profile for this morning so far. The node that you see on the furthest left column, that is going to be the day's volume throughout the day. The column in the middle is the volume for the current 30 minutes. Obviously, it's the same right now because we're in the first 30 minutes. But that is the volume profile for today. And then there's not a lot of volume up here cumulatively because we're at all-time highs, but there's also orange volume over here on the left of the screen, which shows you the cumulative. So all the last few months combined together. And to my way of trading, that's all the information you need. Yeah, see, this high is very weak. So they're trying to convince you it's a gap and go, but I think it's too early. I think we're going to get some chop here. Some gap and chop. Ooh, the bots love the gap and chop. Tom says, Charles, what are your thoughts on trading the open in general? Do you prefer to wait an amount of time, 30 minutes, 60 minutes before trading? So on a day like today, I will take trades right out of the open. When the market creates a gap, there is always a potential for a gap and go. Again, I don't think this is one. I think this is gap and chop. I think they're faking out a gap and go right now. But technically, that moment that I was talking about earlier, if I saw that, that taper in volume and that resistance holding, that would be when I would get short. But I'm not this morning. To get me short now, they'd have to get below the overnight low and get new selling there. Otherwise, what I think is probably more likely is they'll just poke below and then come right back up for the high. So I don't take trades based on any particular time of day. I take trades based on whether I understand what the market is doing, right? So on a gap day, I might know what the market is doing 1 minute into the day if it's a gap and go. Or if I'm looking for a gap fill trade, if I think there's a high probability that they're going to get to the previous day's high or low, I could get in the gap fill trade the moment the opening bell rings. But I must first feel I know for sure what's happening either way before I enter trades. When we open inside the previous day's range, it is very uncommon that I take trades in the first hour because I need more information to work with. But on a gap day, boy, the emotions are flowing right from the opening bell. And if you can read them, you can understand. Hello, good time. Always happy to see a good time. Jay saying the NQ took out the overnight low. Let's take a look. Oh, yeah, NQ's bearish. Bear. Okay, so now the question is, where do they get a bounce? And when they come back up, can they turn either half back, which is currently at 18,450, or the overnight low, 18,460? Can they turn that into resistance? If they can, monitor for continuation lower from there. If they cannot, if they come back through the opening price now that the sellers have taken control, if they come back through the opening price, they will likely get a gap fill. So on the NQ, the sellers must remain in control and keep that momentum going. ES still feels choppy. It's so choppy, oh so choppy. With the botties are buying the low. So here's more bot-related information from the Bookmap. As the market got to this node of liquidity that was sitting, right where price currently is, they disappeared it. They spoofed it. They did not let it fill. But what did they instantly do? Started to add more liquidity lower. So they are trying to get a magnet to pull price down. That is bearish to see. Debbie B says, I want to hang out with you at a karaoke bar. No. Only on the internet. Not in person, where I can see people's faces as they listen to my shrill voice. Jay says the advancers versus decliners are still at plus 820. Let's take a look. Yeah, but they're heading in the right direction. It's looking bearish. I'd be more focused first thing in the morning on the ticks. The advancers versus decliners in the breath take a while before they really give reliable signals. But the tick should tell us if we're getting new selling. So this is, chop. They're going to keep passing up and down through the opening price. But if they keep the ticks below the zero, it's more sellers getting in than buyers. And we want to be aware of that information. I'm guessing here, I don't know for sure, but it feels like they want to make one more pop through the high and then come down. And so what happens with the tick when they make that pop up will tell us what comes next. Bookmap is just saying this is shenanigans, folks. They're trying to get you long so they can stop you out. They're trying to get you short so they can take your stops too. One thing that's very valuable when the market is in sort of this bot shenanigan zone, if you have the icebergs and stops setting on Bookmap, often whatever low will end up holding, again, I'm just talking about minute by minute, intraday, whatever low will hold will often be where they take out a large single order of stops. They took out 148 stops from one poor schmuck. And then that wasn't enough, so they came back to get 160 from somebody else, and then now they can head back up to the highs. So that as they do, everyone's buying. They're buying. They're buying. And then they reverse and do it again, and they take out all those stops that are just above the current day's high. So everybody's got their stop up at like 82.75, 83. So now they poke back up, they take them out, and they reverse and come back down. It's bot shenanigans, you guys. It's computers playing games with our heart. Quit playing games with our heart, computer. With our hearts. No, I won't. Jay says the NQ got to look below and fail the overnight low. Well, that increases the odds of a gap fill for the Q. Yes, sir. So they needed to hold that opening price. Now they just squeezed all the sellers from below there, increasing the odds they're heading up to 18,500, and we will look for new sellers there at the gap fill. So there's your first set of stops taken out at the high. 245. Thank you, sir. May I have another? There's more stops up there. Sheena says, would you put a stop above a short? Yes, those were buyers that got stopped out there. So the market opened and it started going up, right? What was the first move the market did to the upside? Right? Then they made that really exact high and they came back down and they took out these stops down here. Those were buyers that were going long on the way up with their stop below the low. So it came down, it took out their stops, right? And it squeezed all of them. And now it's turning around, it's going back up. Okay. So now anybody that was selling on the way down, they're fixing to get squeezed right up here around 83. And it'll just keep doing that. It'll chop up and it'll chop down. It'll chop up, it'll chop down. It'll do it for hours if it keeps working. If they keep taking out a bunch of stops on both ends, they'll just keep reversing and doing it again and again. The market this day loves a gap and chop because everyone is emotional on a gap day. Maybe they're in a trade from Friday and they're feeling like they're wrong. Maybe they're just looking to get into a trade for this week and they're desperate to get into a position. And so if the market just keeps going up and taking out the stops and going down and taking out the stops and going up and taking out the stops, it can just chew up stops on both sides for however long it works until it doesn't work. And then the market starts to move in whatever direction it's inevitably going to go. I like to think about the market like it's an animal that's like hungry and it doesn't care. It'll eat, longs or shorts. It just wants to eat as much as it can, and it'll behave in whatever way it has to behave to get the biggest meal it can. If chopping around an opening price when you gap down lets it eat a big hearty meal, it'll just keep on chopping. Let's take a look at the Q, see if they filled that gap. Not quite yet. They're looking for one more little push on the Q. Look at them. Look at them. Reversing in exactly the same place as before. Woohoo! Boy, the games they will play. So I literally have the exact same comment I made the last time. It's resistance. It's bearish. But if you're going to short here, move your stop below your entry immediately because they are likely to push back down through the opening price and then they are likely to come back up once again, because of the exactness of that high. Oh, so choppity. Michael says, I'm new here. Are you on Bookmap every day? No, sir. Just Mondays and just for another 3 minutes. The rest of the week, I do the first hour on a private live stream called the Piratetraders Brigade. You can see up in the top of the screen. You just go to piratetraders.io/join. It's $10 a month and you can join the party. You can listen to my terrible singing every day. And apparently look at my terrible hairdo. Okay, I suspect we're going to get a news drop here at 10 a.m. Anyone from the chat want to tell me what it is? I'm seeing that liquidity get thin on the Bookmap. The day trading bots are turning off. Beep boop, beep boop. We don't want to mess with a news drop. Beep boop, beep boop. New home sales. 10 points for Tony. So if you're not familiar with the concept, there are different day trading computers that do business at different times. There are sort of bracketing bots that are just in the market all day, every day, picking up pennies in front of a steamroller, just little moves here and there, making a few bucks. And then there are a whole different set of bots which just read when news is dumped. They read the news very quickly, instantaneously, and then they enter trades instantaneously, and they try to make money off the volatility, like in that moment, in that minute that news comes out. We can see that that's happening when we're looking at Bookmap because the liquidity will start to go dark. You see that? How it was like all this liquidity, and then now just most of it disappeared. So that tells us that the one set of bots turned off because in 1 minute, another set of bots is going to turn on. An interesting thing about this is any liquidity that stays when the Bookmap goes dark is likely real sellers. So there is somebody with a real order up here at 85 looking to go short. And they ain't afraid of no news. So here comes those news bots to give us a little volatility. Boop, beep, 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 boo. New home sales, good or bad? Long or short? Buy or sell? Man, Jay was on it. Jay, are you a bot? Boy, you read that quick. Okay, so the market just created what we call a poor high. That increases the odds. Even if it pushes away, it is likely to come back once again. So that tells me there's a high probability we're going to poke through this high at some point. Yep, that guy changed his mind. He saw the poor high too. He's like, nope, actually, I don't want to get short there. He's worried they're going to get a gap fill. All right, well, this is the end of the stream here on Bookmap. I hate when it happens like this, when we're like right on the edge of our seats, not sure what comes next. I always prefer to be able to give you context for the rest of the day. So if you were to put a gun to my head right now and tell me that I got to make a decision about what's going to happen today, my guess is we're going to poke up and fill the gap to 52.90. Find resistance there, and then head back down for the overnight low. There is also a very good chance of resistance at around 85. And that's because of, just like I talked about down here, how when they got down and they took out some big stops, that's where they were able to reverse. The same thing could happen right here above the A period high. There's a lot of stops up there. Everyone who's been shorting so far today has their stops right up in there. So it might be that's all they need, is just to poke up there, take out those stops, and then reverse back down. If I were to see that happen, If I were to see that they took out some big stops and then immediately reversed like they did at the low, anything below the opening price would be sellable for continuation to the downside, in my opinion. But probably they're going to fill the gap, and then the sellers will step in. But again, it's just too soon to say. So head on over to the private stream, Brigade members, and we will figure it out there together. Thank you very much to the Bookmap. We will see you all next Monday. Enjoy the rest of your day. Enjoy the rest of your week. Make as much money as you can. Members of the Brigade, let's set sail.